I was this close to quitting trading after years of grinding, testing, blowing accounts, and doing everything without nothing to show for it. I started to think, well, maybe this just isn't for me. Then I found this one setup which changed everything. It's built on liquidity manipulation and structure shifts based on ICT concepts. But it wasn't just a strategy, it was understand why price moves the way it does. The first time I fully committed to this model, I caught a 3-hour trade that gave me more confidence than any win before. Because I didn't chase it, nor did I force it. I waited, I read the market properly, and executed with precision. The setup looks like this. Price sweeps obvious liquidity, a clean break in structure confirms the reversal, a fair value gap forms, and that's where I look to enter. That single shift turned my trading around, and now years later I've built a full-time income and earning over $150,000 a month off of this framework. In this video, I'm going to walk you through this exact setup, show you where I failed and how it became the model that saved my trading career. Now this model is so rare, but it works every single time. And for this model, we'll be using the Fibonacci retracement. So as you can see, when our trading time comes, we look for a market structure shift with displacement up on the 10-minute time frame. We also look for a liquidity sweep and a rejection of the high as always. So as you can see, we have a liquidity sweep here. We have a rejection of the high here. And we can identify a market structure shift with displacement right here. So what we're going to do, we're going to mark out the Fibonacci like this, from high to low, and as you can see, we're going to wait for the retracement into the Fibonacci zone like this. So boom, 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 boom. So it could go anywhere between the 62% all the way up to the 78% range. So anywhere between there, once it gets filled, we expect price to start distributing towards the downside and making us profit. And again, what we'll do, we'll target 1 to 2 R based on our stop loss. So for this one, we're going to stick to 1 to 2 R strictly. And as you can see right there, that's how we'll make tons and tons and tons of profit. Again, if you guys do enjoy these videos, don't forget to like, comment, and subscribe. And if you want us to pass and manage your funded challenge and get your payout guaranteed, and the best part is you don't pay a single penny until you do get a payout, click the first link in the description. We're helping many traders, hundreds of traders, pass their challenges, secure funding, and get their very own payout without paying a single penny until they do get that payout. So again, you keep 70% of the profits and we take 30% of the profits. It's gonna be the exact same for buys. We come before our trading time, and this is really simple, but it's a model that works every single time. As you can see, we can see everything that's going on. Had a liquidity sweep, rejection of the low, and then we had that market structure shift with displacement right here. And then we'll mark out fib from low to high. And anytime it comes in the 62 to 78% range, that's where we'll look to enter the position and we'll make tons and tons of profit. So you can see the 6 pip stop loss. As you can see, we target a nice 1 to 2 R. Boom, boom, boom. And then price does its thing. And of course, it goes into take profit. So again, don't forget to watch all the way to the end of this video and you learn how to trade the strategy and make yourself tons and tons of profit. But let's actually walk through this. So as you can see right here, what we actually do have is the market. And the market is doing absolutely nothing. So again, if it wants to go up, it can go up. If it wants to go down, the market can definitely go down. So we let the market play out, we let it do its thing, and we wait to see what actually happens. So as you can see, the market is showing signs of, just being bullish and just pushing towards the upside, yeah? So what you can see we have here is we essentially have a liquidity sweep. So we just want to mark this out as a liquidity sweep. Secondly, you can see that the market is actually failing to get below this low. So we have the rejection of low. So that's just as important as the initial liquidity sweep. Now, did we have a market structure shift with displacement? Yes, we did, which was right here and can be seen on a 10-minute. If we go to the 5-minute, it's going to be much clearer. But on the 10-minute, you can see we did have a market structure shift with displacement. So what we can do is we can mark from low to high, as you can see right here. And like I said, price can come within this range right here, this entire gap range that we have. So again, I did say a minimum of 5 pip stop loss or more if you're not confident with a 5 pip stop loss. As you can see right here, that's how 1 to 2 are risk to reward target on the stop loss. So we just let price do its thing. Boom, boom, boom. As you can see, it does come into our stop loss. It fills this entire area right here, and then it starts to push towards the upside. As you can see, it does end up going much higher than 1 to 2. It's pushing up to a 1 to 4R, as you can see right there, essentially before we started to have that reversal. So we did push to a 1 to 4R before we had that reversal, and you know, that's just the beauty of it. So again, if you want us to pass and manage your funded challenge, don't forget to click the link in the description, and we'll get you a payout and you don't pay a single penny until you do. So as you can see right here, we have another market structure shift right here. We do have a liquidity sweep right here, and the best part is we have the rejection of the high. So we have all three concepts. What we'll do, we'll grab the Fibonacci and we'll just wait for price to do its thing. You know, if price wants to go up, it can go up. If it wants to go down, it can go down. As you can see, price does retrace back into the Fibonacci just like this. So this would have been a pinpoint entry, as you can see right here. We could put our stop loss just here, just a 7 pip stop loss, and target a nice 1 to 2R. And as you can see, we can expect price to definitely go lower because of the liquidity points that it can potentially target on the other side of the market like this. So we just let it play out. We let price do its thing. And yeah, as I said, because of the liquidity points, it can definitely go much lower. And it does end up going to about a 1 to 5 at that liquidity point and a 1 to 7. So yeah, and it keeps going lower and lower. So yeah, if you're able to make sense of everything, again, you guys can make tons and tons of profit. You can see long term it went to about a 1 to 10R, but you know, again, we can't really predict this. So this is why I say stick to 1 to 2R for consistency, because if you're hitting 1 to 2R every single day, that's better than just targeting 1 to 10R once. Again, you can go a little bit above 1 to 2R depending if you know there's liquidity points in areas to target on the other side of the market. But I hope you guys did enjoy this video. Don't forget to like, comment, and subscribe, and I'll see you guys in the next one.